These are the stock picks for the week of September 7th, 2015. I'm going to show you my setup that I've been using real quickly so you can copy it as well. It's pretty easy. All you have to do is go to stockcharts.com, put in your symbol, and I will tell you what to switch. Give me a second. Here are the stock picks for this week. We have 6 this week instead of 5. I was screening them and I couldn't figure out which one to take out because they're all pretty good plays, so I just decided let's do 6. So I'll do this a little more quickly than usual. I think the first one is VGTL. Indeed it is. And I got Morningstar open here as well, just to figure out what these stocks are. I think a lot of them are on the OTC market because they're penny stocks. But if you're ever questioning what this stock does, and if you want to look into the financials of a company, I'm not going to do that here because we're just looking at the technicals. But you go to Morningstar.com and it'll tell you what it is, and you can look in the details, look into the details from there. So this is an entertainment company, no dividend. Financials are basically not. In other words, not much revenue here, but we don't care about that. We are going to be looking at the chart. So here's our chart. We got the candlesticks. It's a daily chart, but we're going to change out these indicators. We want a simple moving average of 20 and 30 for our comparisons. We are going to use the Arun lines. We are going to use the Chaikin oscillator, and we are going to use these slow stochastics. Update that, and that'll give us a pretty decent chart and 3 indicators that will help us determine whether there's a buying signal. All of these are bullish decisions, so they're all going to show us buying signals, or I'm going to have at least a reason to get into these stocks. This one we're going to want to hold off on until Monday. We're going to want to see what happens on Monday. If the price opens above the current price of 0.0121, then this is a good buy. The reason is we have this candlestick pattern here called a deliberation candlestick pattern. We have a small white candlestick above the long white candlestick. Most of the time that is reflecting investor indecision, but generally what happens about 80% of the time is that the price continues upward. And if that happens, we can predict that pretty safely that the stock price will continue its upward path. If you see the blue line above the red line, that means the short-term moving average is higher than the long-term moving average, which means that the stock is bullish overall. So this would be a good buy. We know it's going to go up in the future based on this candlestick pattern, and in the immediate future, I meant to say, and it's probably going to go up in the long-term future based on this moving average chart. In addition, although we are negative in the Chaikin oscillator, we can see that it's tilting upward now, which means that more money is flowing into the stock. And most importantly, I believe, is the black stochastic line crossing above the red stochastic line down below the 20 line, which means that the stock is probably oversold. So we've got a lot of good signals here. You might want to get in now. I would wait until Monday and see where the price is at the opening. If it's below this dollar value, don't get in. If it's above, get in. And this might even be a good position trade. All I do to look at the position trade possibility is switch to the weekly charts. You can see we're bullish on the Arun lines. We are getting to bullish on the moving averages, and there's more money flowing into the stock, but because of the divergence, it's a little dangerous. It looks like a lot of people are leaving the stock in the long term, which makes sense because it was at $2 and now it's a penny. Now it's a sub-penny stock. But we're just going to be looking at weekly plays. The idea here is if you want to test my stock picks, all you'd have to do is look on Friday and see if these stocks rose or fell. I'm predicting this one's going to rise. So if you're a swing trader, this is probably a good video for you to watch. Let's move on to the next one, JNUG. I'm pretty sure this is a gold miners ETF, which means that if you want to get in on gold, this is usually a good selection here. So this is a both 3 times the leveraged ETF. That means if gold miners go up, you're going to go up usually 3 times what your friends will if they're just invested in standard gold miners. I hold on to calls for gold miners myself. as long-term plays, but I'm suggesting this stock, this ETF, as a short-term play. The reason being, first, if you look at the candlesticks, we have a bullish engulfing candlestick where the white candlestick eats a small red candlestick, and we've seen the fast moving average line, the blue moving average line, short-term moving average line, cross over the red one, which is a bullish signal. Usually it's a buying signal. The Chaikin oscillator is very volatile. It's really not dependable here, but you can see that we're moving upward. And if it continues like last time, if we move into positive territory, that means more people are buying than selling. Well, that's not really what it means because this is an indicator of an indicator of an indicator. But that's the general gist of it. By the way, the Chaikin oscillator, very useful, but hard to interpret. So when you see this, just imagine it as being positive when money's flowing into the stock and negative when money's flowing out of the stock. And if you see a certain direction, it means that's the direction it's headed. Is it headed into positive territory? Is it headed into negative territory? Should you be worried? Well, you look at the history. And as you can see, the history of this ETF was pretty stable until recently, and that's why I would dismiss this indicator in the analysis. Now, in terms of the stock being oversold or overbought, looks like at a time it was overbought and now it's in oversold territory. We're not sure what's going to happen. If you want to wait to watch these, usually the black line turn upward, that's a pretty good sign to get in. But I'm just going to say, based on this candlestick and the recent buying signal we've had, it's probably going to go up a bit. Gold in the long term might not be a good investment, or in the short term, I'd say, not be a good investment. But this ETF looks like it's going to turn upward, at least for the coming week. Next stock is DIRV. This is called a Direct View Holdings. DIRV. Direct View Holdings. Another penny stock. And if you look at Morningstar, it's never going to go below the penny level, so you're never going to really be able to see how much it's worth unless you look at the chart. So it's teleconferencing service for businesses. Don't know about the business, you can look into it yourself. It's been pretty stable at this maybe $0.005 level, but recently we saw a candlestick that's out of the region we previously saw. And along with that, we see finally the Chaikin oscillator in positive territory, which means that people are starting to get in on this stock. And if they get in, they probably know something that others don't. As you can see, the volume was very large on Friday, so something might be happening behind the scenes that we don't know about. There might even be something in the news if you want to look at that. But this is a good possible play. This is a good possible pump for the penny stock. So if we see something like this, again, that's a large ROI for you. But depending on what the company is like, you might want to wait for this to happen and get out immediately, because that would be a pump and dump, just like what we saw back in May. Pump, dump. In 1 month, it went from, if you want to calculate this, it probably went up like 2,000%, something like that, and then fell the same amount. So this is a quick play. You got to keep your eye on it if you want to get into this. Next is another penny stock. I believe a lot of them are penny stocks. Is Immune Therapeutics. Something big must have happened. This is probably a biotech company. You can tell by the name. Something big must have happened. People jumped into the stock. Money flew way in there. It's still in positive territory. But we see it kind of sloping downward. This is definitely not a pump and dump because it's now at a brand new level. So something good is going on with this company. But we can see that the bullish trend that we had before is kind of slowing down, and these lines are about to cross and it's about to become bearish. We also see that deliberation candlestick we've seen previously. And another important thing is that there's a gap right here. And I believe that at least the gap is going to fill. So that's moving from 20 to 22. If you get in at 20 and get out at 22, that's a 10% ROI. That's probably going to come pretty quickly. More importantly than that, though, is we have this sign that the oversold the oversold concept of this stock is now basically true because both the black and the red line are under the 20 line. And as you see the black line turning upward, if we move out of that oversold territory, what happens is investors realize it's oversold and they start to buy the stock because they believe it's undervalued, which pushes the stock price up and will hopefully allow us to fill that gap at 0.22. You might even go higher than that. So look into the financials of the company for a long-term play. But for the short-term play, what we're going to do is we're going to buy at 0.2, and we're going to immediately, after buying, set a sell limit order for 0.22, or wherever this gap ends. And you'll get your order automatically fulfilled when it hits that price. And there you go, instant 10% ROI. Next is ERY. ERY, as you can see, has been a bullish stock for the long term. Oh, there we go. Okay. So it's a bear stock. It's 3 times leveraged. What that means is it's on the energy market. What that means is that for energy companies, oil companies, if they go down, this ETF goes up. So obviously, over the past few months, as oil has dipped really low, energy stocks have taken big falls. This ETF has gone up about 100%. Okay, so one thing a lot of people worry about when investing in a stock that's been going up for a while is, are they getting in too late? Now, that's not really ever a worry if you're swing trading, but if you're position trading, you usually want to see an upward trend before you get in on it. Now, depending on what we're looking at, that upward trend could be, a monthly upward trend just for a month, or a week. In this case, we're seeing an upward trend that's almost half a year, and some people might think it's too late to get in for a long-term hold. That's not really my business in this video because I'm teaching swing trading. But if you look into the financials of a company, this is an ETF, so it's a bit different. If you look into the financials of a company and you feel like it's a good company and you see that a few criteria and indicators are fulfilled that shows the momentum still in place, there's no reason not to get in. Yes, the history of a stock is important, but you don't want to use the fact that it's been going upward for a long time as a reason not to get into a stock. Okay. All right. So that was a bit of a diversion, but here's what's going on. We have all right. Check out the volume. So we had a volume spike that led to this really high white candlestick, and after that we had a red candlestick. This is called a bearish harami, and after that we had a gap. Now this gap came on a low volume day, and it's within the trading region. It didn't bring us to new lows. Based on gap theory, gap statistics, I should say, this gap will fill. So we're looking at a gap that'll fill at probably $35, and if we get in at 30.58, what we're doing is we're getting an ROI of 14% when that gap fills. So this is just like that other gap trade we looked at. What we're going to be doing is we're going to be buying the stock at 30.58 or wherever it is as it opens on Monday, and then instantly afterward setting a sell limit order to fill this gap. So when the price hits 35 or 35.5, your order will be filled and you will get that ROI instantly. That's one of the beauties of area gap trades. As you can see, the money that was flowing out of the stock is now coming back in, and we don't really have anything interesting in the stochastics. This is mainly a gap play, my bread and butter. And the last one is BTU. All right, so BTU. The Arun lines give us a bullish signal. They did actually back in late August. However, the moving averages didn't give us a buying signal until very late August. So there's a little diversion there, but they're both bullish signals. So whereas we used to have this stock trailing downward pretty much all year long, now we're seeing a shift in direction and in volatility. You can see this the curve is rather slow and stable and smooth previously, but nowadays it's very jumpy. Um, One of the reasons is all the money flowing into the stock and then going out immediately. It looks almost like a penny stock's pump and dump, but it's probably not. What I'm going to say about this is we have a bullish engulfing candlestick and we have two decent buying signals. And like I said before, we're not getting in on this too late. Yeah, it would be nice if we could have got in earlier when it was at a low, but now that we have two very nice buying signals and a candlestick buying signal, this is a good time to get into BTU. And by the way, the Arun lines is actually a really good buying signal just by itself. I never use one indicator by itself, but for a lot of stocks, if you look at them retroactively, you could see how the Arun lines mix well with the buying and selling signals. So as the red line is above the green line, we're basically in a bearish mood, but as they cross, then we switch into a bullish mood, and you can see they crossed here, and now we're bullish. If you look at the Dow Jones Index, you can see the same thing. You could have predicted the bear market that we are basically hit. You could have predicted that back in June if you just watched the Arun lines. Even though the index looks pretty stable, it's not really bullish, it's not really bearish. It looks pretty stable. But this Arun line crossing tells us, okay, something bad's happening, and well, we're probably gonna be losing a little bit of volume, or not volume, but we're gonna be losing investor interest, and that usually happens around summertime anyway. But as you can see, if you just made your bets based on this Arun line, you'd get in here, then you'd become short here, and you'd wait again for them to cross, and then close your short position. Anyway, let me put those stock picks up here again. And if you have any questions, leave them in the comments section below. But these are the picks for next week. Remember, we are swing trading. Get in and get out quickly. And I've already given you two price targets for the gap trades.